Yo, YouTube, if you're having trouble going from the higher time frame to the lower time frame and actually finding trades, watch this video all the way through. I promise you it's going to help. I'll break down the higher time frame to the lower time frame. We pretty much dissect the candle. If you want to see the rest of the course, go down below and join the community in the Discord. I'm gonna be releasing the entire course for free. Psychology to take the gambling out of your trading and make you a profitable trader and a professional trader, and to really help you understand the markets and what you're seeing when it comes to PO or any market that you're looking at. Because don't tell nobody, but if you really can read the charts, it don't matter what market it is. Pocket options, regulated, not regulated, stock market, Forex, crypto, it don't matter. If it's a chart and you know how to analyze the charts, you can trade anything, period. So I hope that this content helped you. If you got any questions about trading or you need help with anything, yo, drop the comments down below or join the community. Send me a DM. I'll get back to you. Other than that, I got big plans coming. Big things that I'm gonna be doing. I'm gonna be releasing a couple videos here on updates of what I want to do with my journey of trading, and we're gonna do a community get funded together. So as I'm getting funded, you can get funded with me. We're gonna take the trades together and trade them together live. I don't do signals, so I'm not gonna sell you no signals. I'm gonna always share my ideas, and what you do with the ideas, how you take it. So I got some ideas of what I want to do, but I just wanted to share this video with you to give you some value and actually show you, it's really not that hard when it comes to trading. When you can read the charts and understand the market, it's all about the process. Stick to the process. Whether you win, lose, it don't matter. You should be numb to the feeling, and you should just stick to the process. Yo, I hope this video helps. I appreciate you. I thank you again, for real. Subscribe, like, and share the video. Peace. What's good, family? So this right here, we're gonna have this broken down into a couple parts, and hopefully you're able to actually well, we're gonna break this idea portion, the building the case section, down into some parts, and hopefully that it gives you an easier idea of how to go about this. Okay, so the first part is going to be talking about the higher time frames. Let's get into this. Okay, so you need to understand the higher time frame holds the most weight. This is where the higher time frame is. Let me make sure I go to the demo. I don't want to mess up this because I'm supposed to be recording that whole session, like the whole account build, and I don't want to mess it up at all. Okay, so the higher time frame is going to hold the most weight. This is where you need to know what's going on in order to be able to enter on the lower time frame. Let's go to a chart here. Let's see. I like Facebook. This is looking beautiful. So the higher time frame is where you're going to mark your zones. Now, when you put these zones, you can use lines, you can use squares, whatever you prefer. I'm going to show you both. As a line, you're going to keep it pretty tight, obviously. The most touches is where your zones are, and it's super crucial to have this on point, because if you're new to this, I advise you to have an area, because the area is way easier to see than that little line. See, the line is like, you got to kind of you don't have to be precise, like it doesn't have to be on point, but you want to be very, very close to where price is always going to react. So we have that zone, and then I'm going to go ahead and make another zone. Price is going to probably come back up to here. This would be the next point of contention, more or less, I guess. I don't know what the fuck. This is an area of concern. I couldn't think of the word, so. Or if you're trading a 15-minute trade, this is your target. Really, your target's down here, because this is going to be where price is going to react. I apologize. Let's put that down here. Price is going to more than likely react when it gets to this point. As you can see right now, it's reacting at an area of concern on the higher time frame, which will cause wick cities, which is known as consolidation. You can see, let me pull this over. You see this area? This is an area of concern. Every time prices came over here on this side, it's shot back down. It finally broke. but it only made it to here, and it immediately pushed back down, gave you a nice pattern, pushed off, came back down here, gave you a beautiful pattern, and then it pushed back up. It's just in a consolidation period, and right now it's at the midline on the higher time frame. Remember my rules, I don't trade to or from the midline, I trade to the midline. So if I'm trading the midline, I'm trading from here or here to the midline, because the midline is normally lots of reaction. Price is going to react very often. There's going to be, on the lower time frame, is going to be lots of areas of concern. Area of concerns, concern. It's just it's where price is going to like to react. Now, let's go to, we start on the 5 minute, and we're only doing the 5 minute because I'm taking 3 minute trades, and this is how you would do the 5 minute and the 15 minute. You would treat it the same, but when you do the 5 minute, I like to drop down to the 30-second. Now look at this move. This is beautiful, by the way. I'm just going to give you a gem. This is beautiful. We got a nice level line break, right? We got a nice cycle change. Price broke. We got a cycle change up, broke the level line. This move, strong move in the level line. We're going to probably get, this is the dissection of the candle. This works out perfectly because you're going to be able to see it. So I'm going to make this red. I'm going to put this around this candle, okay? This candle, it's at this area. I want to see it pull back a little bit, but let's highlight this pink. So this is dissecting the candle. Let's drop down and see what it's doing on the 1 minute time frame. Okay, perfect. It's overextended on the 1 minute time frame. Yeah, if I want to take an entry on this, this is what I want to see. I want to see price where it's at. I want to see it pull back. It can go up more. It can go up more. That's fine. But I want to see price pull back into this area of concern, this midline. And then I want to see price inevitably shoot off of that. Now, this is where price can be playful, okay? You see how it's pushing, okay? It's pushing. That's perfectly fine. If we go down to the 15-second and actually see what's going on, it's obviously overextended. We got an area of concern here that price can come back to. So price don't even have to come all the way back down to here. It can literally just hit the top of this area and then push off. I know that it's going to probably want to pull back. It's overextended a lot, but there's enough liquidity up here for it to keep pushing too. And there's plenty of liquidity down below that has pushed it up. But if you look at this area, overextended, this right here, this square is that 5 minute candle. So we're inside this 5 minute candle, which we need to obviously extend the candle wider, because it's no, it should end right inside that, honestly. No, it's gonna be wider. It's gonna end like right here. But that would be my idea. I'd want to see it pull back and give me some sort of pullback and then push off before I ever do anything. But all we're doing is just dissecting that higher time frame. This is what I'm looking at. The 5 minute, give me this move. Okay, normally in a 5 minute, before it pushes up, before it makes any strong movement, it's going to give me a pullback. But it didn't give me that pullback. It immediately started shooting up and it started strong. But now it's giving me that pullback that we see on the lower time frame that can happen right here. See this area of concern? So now if I really wanted to enter, I can go to the lower time frame, the 15-second, and see, okay, I know I got this area of concern. Price is kind of pretty much in the middle of the situation. But before I take an entry, I know my target isn't far away. This would be my target because this is the next main area of concern. My target isn't far away, but I have a pullback issue that can happen. This trade is a very high risk trade because you could get a level line break. We could get a level line break on the 15-second, and then it can do some shit like this and pull back. So you have to be patient. You have to wait. Everything needs to line up from the higher time frame to the lower time frame. The higher time frame, if you would have got in down here at this level line break, you'd have probably been good. You'd have been golden.
you'd been definitely golden. But we didn't get in on it. We didn't see it happen till after. We didn't get in. We're not rushing. We're not doing nothing. We're just letting it play out. We're letting the trade happen. If you wanted to get in, you can go to that lower time frame, the 15-second. Really get deep in it. See that, okay, it's pulling back like we want it to. It's pulling back like we want it to. We know the higher time frame holds the most weight, so it's pulling back on the higher time frame. That's fine. That's perfectly what we want to see. Now we get this move. We know that we're in this push up here to this target. This is a nice candle. If price gives us a nice close here, it's more than likely not going to pull all the way back. That's crazy. That pullback would be nuts. It's possible. It happens. But the way that the move is already broke, all this structure, it's coming into this liquidity. It hit that midline right here. It's hit that midline, but we know price wants to eat this liquidity up here. There's so much sitting up here. Look at it. There. Price wants to get back up there and eat it up. But we got another candle opened. Beautiful candle. If you're going to take that, you should have been on the lower time frame. Right here, you could take a either 2 minute or 15-second. Let's go ahead and take a 2 minute. Because we got the level line break. Got the nice level line break closed above the level line break. We got a nice another close above the level line break. We took a 2 minute trade because I'm judging that my target is here. So that's about a minute push. And I know that I have room for it to give me a pullback still to where it could give me a double bottom like over here and then give this strong push. So I want to be able to counteract that. But this is how you would put your timing in there and understand your timing, because you got to know the areas of concern of the lower time frame that can come into play. But you need to know that the higher time frame is what's going to hold the most weight. The higher time frame always holds the most weight. So I'm perfectly fine with it given that pushback. Like I said, I already analyzed having that in there. On the 1 minute, it gave me a good push, but that close was ugly. But on that 15-second, remember we took the entry off the 15-second. It was a good close. We waited for the close of this candle, but I told you we have the concern that it could pull back and give us a double bottom before it gives that push, and ultimately that's what it's doing. Looks like it's giving us that double bottom. Hopefully I had enough time in there in order for price to revert back up. Now if I would have took this on the 30-second, I probably wouldn't have got caught, and I probably wouldn't have got caught in it. If I would have waited for the close of this candle, I wouldn't have got caught. Well, I probably would have had enough time because it's forming that double bottom. We might get it, but it's you're not trading. It doesn't matter if we win or lose. We're trading the process. There is no different thought process that's going in my head. I'm trading the exact same thing. I just didn't count. I should have added more time to counteract this pullback, or I should have just waited and entered more on the 1 minute or the 30-second. If you see on the 1 minute, we're kind of getting to a Wick City situation, which right here you could literally take this trade, but it could pull back down into this area, collect some more liquidity down here because it's overextended, and it could push up. So when you take a loss, it is what it is. Don't be upset. You understood how to dissect the candle, went from the higher time frame to the lower time frame. I knew that it could possibly pull back. If I would have took a 1 minute, it would have been good. We'd have smacked it. I took a 2 minute. Oh well, life goes on. Now I can ultimately, I see that I have another level line here. So this is what we'll do. We'll wait for this level line to be broken, and we'll wait for it to be confirmed, which, let me go put a trend line there. It's breaking. We want it to confirm, which would be a close with the body above the level line. That's what I would want to see. I would want to see the body closing above the level line. Now you can ultimately do this on the 15-second because we know we're going off the 30-second level line. We want a nice strong push, something that's going to give us, hey, momentum is now in your favor again. Now let's go back out to the higher time frame because we need to see what's going on. Now we know price is at this area of concern. Remember, the higher time frame holds the most weight. we're getting that push. Let's go to this 30-second. We should be getting ready to get a level line break. In this candle here, as you can see, we're getting some little wick action play. Should get a level line break here. And if this closes with the body above the level line, I will take the trade. But if it doesn't close with the body above the level line, I'm not going to take it because it could just pull back. This candle could just pull back, which, as you can see, it's pulling back. But now, like I said, we want this level line to be broken with the body above. So no difference. The level line hasn't changed yet because we're in a little consolidation. The higher time frame still reading that it wants to go up. We still have this target in mind, okay? It hasn't changed yet. Even if we go to 15 minutes, we're still looking golden. We're still looking golden. We could get a pullback in here, but from what we see on the time frame, oh, nope, see here on this 1 minute, nope, that 1 minute's going to probably pull back down into here. But 30 seconds still giving you that consolidation. Like I said, the level line hasn't changed yet on the 30-second. This is my entry. Once it breaks this level line, gives me a body close above, I will take that entry for a 2-minute trade. And that's just how I look at the market. I normally like these head and shoulders trades, but I will take the breakout and retest trade because we broke out, we're retesting. It just has to hit a certain way. Now this is cool. I like how this is going. Like I said, I want the body to be above the level line. The body needs to break and stay above the level line when the candle closes. Just because it breaks the level line does not mean I'm taking that trade. It's just simple as that. I've learned to watch the candles and how the candles move. The candles can tell you a lot about momentum and price, how it's moving. Especially when I used to take a lot of 23-second trades. That's what I would kind of really focus on, is the momentum of the candles and what price is telling me. Now this is looking good. We want this body to close above that level line, or at least with the level line, and we'll take that trade. Now just wait. See, you gotta wait. I don't know. I'm kind of iffy about this because that pullback. Yeah, that pullback was iffy. It's nasty. We're in a consolidation period. So you got to be very, very careful with this because this can still bleed all the way down to here. Collect this liquidity, even go all the way down here and collect this, and then shoot up. This is pocket options, and pocket options is known to do that to me multiple times. But that's why, like I said, I'm not going to take it unless that body is above that level line. That's a beautiful, beautiful move. I'm actually going to take that trade. I like that trade. And we're literally we're taking it to our target right here at the top. If you want to call this the golden zone, that's the golden zone. And the reason why is because we've already came to this area of concern. We know that this is an area of concern. But prices already came here 3 times. So what is price telling you? Price really wants to break it. And if price hits that area and it drops, it is what it is. Sellers have more control than what I thought they did. But right now, at the moment in time of what price has been showing me throughout the higher time frame to the lower time frame, buyers are in control. Just be patient and wait for the move. Waited for that level line break. As you can see, that level line lasted for 1, 2, 3, 4, 5, 6, 7, 8. 8 candles. Then we got the break again. This double break is beautiful. It's preempted for that move. This right here, you see that that little hook, that J hook that we got. That's beautiful. I love the hooks. Like when it hooks up or it hooks down, them are beautiful trades to take. Beautiful trades to take. Just making sure that we're recording. So it's super, super beautiful. I mean, self-explain. I tried to explain it as well as I could. Tried to go in depth of understanding the dissection of the candle and was able to actually give you a trade. But that is really how you utilize the higher time frame to the lower time frame. Understanding that, okay, I'm in this 5-minute candle. What's going on inside this 5-minute candle? Or I'm in this 15-minute candle. What's going on inside this 15-minute candle? That's when you drop to the lower time frame, see what's going on, gives you a better understanding. You'll hear me say in the video of that like account build that I'm doing, I talk about it's beautiful. It's a beautiful trade when what's happening on the lower time frame is happening on the higher time frame. So if we look here, we might be able to see it happen on the 1 minute right there. Then we go to the 5 minute. Should be, see how it's not happening on the 5 minute? It did, but it's not noticeable as if you were to go to say like a 2 minute. You can see it on the 2 minute. So when you look for an A plus setup, you're wanting that setup to be on multiple time frames. Okay, I like to be 2 or more, but if it's one, like if one time frame's telling you like it's agreeing with the higher time frame, but it's not really showing you, that's an A setup. It's not an A plus setup. That's an A setup, probably a B plus setup, honestly, because you're still at high risk. You always want to go with what the higher time frame is telling you. And then when you get really good at it, you can actually utilize just one chart. But going from higher time frame to lower time frame, it slows you down, gives you patience, and it gives you the ability to really see what price is telling you on all the time frames, and what price is like what other people were seeing on the 30-second. It gives you the ability to, oh, I see that, and I get why they're seeing that, because if you look on the 5 minute, it's showing you this, or if you look on the 15 minute, you got this move going, like you got this getting ready to happen, or this setup that's coming up, like that's pretty much why you utilize the higher time frame, the lower time frame. I hope that it helped you dissect the candles. I hope that helped you possibly find a trade. I'm glad that it went as well as it did. And yeah, so with that, we're going to move on to the next session, and we're going to talk about the golden zones and targets. So yeah, I'll see you all there.